Real estate, specifically construction, is one of the hardest businesses in America, and Los Angeles is one of the hardest markets on earth to do it. Today's guest took everything he learned as a two-time tech entrepreneur and as a quarterback on two national USC football teams and applied it to one of the most broken problems, the missing middle housing in LA. He is the founder of Adventure Homes, a small cap multifamily platform using tech enabled lot identification and value engineered design to scale infill development without sacrificing quality. He also builds Hance Design slash Build, a fully integrated design build firm responsible for luxury custom home from concept to completion. Across both platforms, his teams have built over 1,000 residential houses and generated more than 25 million in net profit for investors while navigating California's regulatory and construction minefields. Today, we're going to talk about what actually works in housing development, the systems, the trade-offs, capital discipline, why most projects fail before they ever break ground, and how you can use all of this to help you on your financial journey. Brandon Hance, welcome to MyFinJourney.
Thank you. Happy to be here.
Brandon, if you don't mind, I want to jump right in. I want to understand your journey and how it led you to real estate.
While at USC, I studied entrepreneurship there. Right after school, I started a venture funded technology company, sold that, spun out a separate company, and then ultimately sold that one. In between company one and two, I began investing with a childhood friend of mine who was flipping houses. And he was doing it in a very mom and pop way. Very quickly, I learned that that is kind of the only way, at least at that time. And so a market like Los Angeles had over $1 trillion in single family home values, and the entire fix and flip or redevelopment market was comprised of mom and pop operators. So with my background in tech and capital markets and scaling companies, I thought I could help him first as an advisor. And then ultimately I kind of caught the bug and went all in around 2017 and haven't looked back since.
I love it, Brandon. So if you don't mind, I want to dive a bit deeper to kind of understand the mindset, right? Like for you, how did you end up finding yourself on a football team on USC as the leading quarterback and winning, two national championships? Because that's already very rare.
Yeah, I mean, listen, I grew up always dreaming to be a quarterback. And then ultimately I got to the place where even though we achieved a high level of success in college, I had the opportunity to go to the NFL via the combine, play for the Cleveland Browns and the Jacksonville Jaguars. But I kind of knew where my cap was. I wasn't a physical outlier that no matter how many mistakes I made or no matter if the system worked perfectly for me, that I was going to be that franchise quarterback. I was probably a second or a third string guy when you get to the NFL level. And I had a bunch of friends who had lived that life that bounced from team to team throughout their 20s. And then they want to re-enter the workforce as someone with zero experience as 28 or 30 years old. And that path was just not one that was compelling for me. Specifically, almost the reality that I didn't have a chance to be the very best kind of hit me like a ton of bricks. And rather than it breaking my spirit, I just treated it as reality and said, okay, great. I've taken this as far as I can. I've learned a tremendous amount of transferable skills, built an amazing amount of meaningful relationships, and I'm going to take all of that into a new journey as an entrepreneur.
I love that, Brandon. I feel like there's so many lessons. And if it's okay, I want to dive a little deeper here. Given your success at the high school, at the college level, for me as a non-athlete, it feels like you're already top 1% of athletes at that point in time. Would you agree, disagree? How would you look at it?
Yeah, I think statistically, without question. I mean, there's roughly 1% of all high school football players get a Division I scholarship. And USC was arguably the best team of all time, or certainly was the best team at that time. We went 3 years and didn't lose a game. And it was absolutely a part of a dynasty. So yeah, it was statistically a part of that. It didn't feel that way from my perspective. But looking back from an objective lens, yeah, there's no question it was the top percent. What I was trying to get to was the top 1% of 1% of 1%, and realized I had some limitations of climbing all the way to the tippy top of that ladder.
And Brandon, if you don't mind, help us understand how you had this realization. Was it you looking internally? Was it you talking to advisors? Was it you? Because basically you had to conclude, hey, I'm very good at what I do, but this next step is just a little outside of my reach. And if I don't make it, and if I'm not that starting quarterback at that top NFL team, then I kind of don't want to be second or third string. Like that is an important realization.
Yeah. Part of it is interesting. There's a variety of factors, but I took a Myers-Briggs test, which I'm sure we've all done 100 times and all the variations of that now. But at the time, I had never heard of it. And it was kind of my first foray into the inner world, or specifically understanding about, at that time, sports psychology. And there was someone named Dr. Neednagel who was really ahead of his time in taking the Myers-Briggs framework and applying it to athletes. And he was so good that he could literally watch an athlete's gait just by the way they walked and their physiology and be able to identify their brain type. And based on the brain type, the 16 that there are, he would tell you, here's what you're predisposed to excel at. Doesn't mean that you can't be great if you're not that. But if you look at the quarterback position, for instance, there were 2 or 3 brain types that just are wired to excel. I was kind of that next tier down. So it wasn't all the way to the bottom, but it was like kind of the next tier down, because for me, I was much more analytical and less instinctive. I'm more of a thinker than a feeler. So just having that test, all types of various sciences who study this, was very fascinating to me. So that kind of began my path to really almost being obsessed with studying the mind, and how it related to me specifically in football is I said, okay, interesting. So that doesn't get me all of the way there mentally. What about physically? And from a physical standpoint, I was already kind of an undersized quarterback, pretty fast, pretty good arm. But from a size standpoint, I was undersized. So now all of a sudden, I'm losing an edge physically, losing an edge mentally. And then, of course, seeing, dozens of other people that were my peers and understanding the life that they led kind of post college, seeing what that looks like, playing the probability game, and also just taking a kind of a gut check inside of myself and saying, is this really what I want to do? Because it isn't, I'm not going to be the best, let me quit. I definitely don't want that to be the message. I think there was something within me that says, I took this as far as I possibly could here. Could I squeeze a little bit more out of it? Yes, but now there becomes a real opportunity cost. And so rather than saying, oh, shucks, I'm not good enough, it was, oh, wow, I could actually be amazing if I took this same set of skills and applied it somewhere else. And that's a new challenge, a new opportunity, and one that was really invigorating for me.
I love that, Brandon, because it also really resonates with the idea of building a company, scaling a company, and knowing when to exit. So help us understand, that first startup that you ran. What was it, and when did you realize it was the right time to exit?
Yeah, so I never had a job before starting this company. So you can imagine how skilled I was. And I'm not sure, how old your average listener is, but this was the time that MySpace was the preeminent social network. YouTube had just started, no Spotify or anything of that nature. So the idea in theory, or not, kind of in the most fundamental way, was to empower independent musicians to sell their music and merchandise directly to a fan. And so at that time, it was a widget on MySpace. And then over time, it became their websites, their mobile applications, in stream of YouTube players and Spotify playlists and everything else. And so we had 500,000 independent musicians, and then 3 of the 4 major record labels were all essentially running their direct-to-consumer or direct-to-fan e-commerce business through our platform. And I was very excited originally about empowering the independent musician and democratizing the music business. To a large extent, we really did that and played a major role in reshaping and putting a lot of power back in the hands of the artist. By the same token, a lot of my passion was in that side and on the technology side. And from a revenue standpoint, what began working was actually selling good old fashioned merchandise to the major record labels, through their old school channels. And so we did catch traction. And as a fiduciary of the business, I had to do what made the most sense financially. But I absolutely did begin to lose a little bit of that purpose and a little bit of that creative fulfillment. And so it was for that reason and others that myself and my co-founders decided to kind of initiate a process to sell the business. And we sold it to Platinum Equity and the Gores Group, 2 of the largest private equity firms here in Los Angeles. And they owned Alliance Entertainment, which was the largest shiny disc company in the world. Shiny disc meaning CDs, DVDs, and video games. And obviously that was a format that was on the steep decline. And they saw us digital, direct to consumer merchandise as kind of the next opportunity for them to reposition the business. And it was a very obvious synergy.
I love that, Brandon. And there's so many different ways to take it. But before I dive deeper, I want to take a quick pause and say, if you're watching this episode, if you're finding value from what Brandon is saying, how he approaches life, how he approaches scaling, how he approaches strategically pivoting and maximizing value, take a second to like this episode, subscribe to the channel, share it with a friend who can also get a lot of value out of the episode. So Brandon, I want to start by first off saying, California is probably the startup hub of the world, primarily Silicon Valley. I think you were based in LA. What led you to the idea of democratizing music and working with independent artists. And it feels like the transition from helping independent artists to really going where the money is kind of led you to lose passion, which ultimately led you to exit. How were you able to exit and create so much value for you and other stakeholders?
Well, we were really a pioneer in the space, and this direct to fan or direct to consumer, which now I think is largely termed social commerce. Think of TikTok Shop. We really started that. So, in many ways, we were ahead of our times in terms of consumer adoption. So, we had the vision and the technology. We also had the adoption on the seller side, getting all of the independent artists and record labels behind us. On the consumer side, it took a long time for them to really feel comfortable transacting in a social context. So they wanted to go back to an Amazon page or to a traditional web store, as opposed to really making that kind of seamless one-click buying within a social environment or within a music player. So we had massive traction, but very low conversion in the areas that we were most excited about. And so it became a game of, okay, well, how much capital can you raise and how much money can you burn to continue to stay ahead from an innovation standpoint and maintain your scale from a relationship on the seller side, and hope that the consumer adoption just catches up. And there were VCs that were interested in continuing to kind of play that game. That just didn't feel right to me. There was obviously a very long phase in Silicon Valley where everybody just raised money and burnt it. And if you weren't burning a tremendous amount of cash, you were an irresponsible CEO. And even at that age and even at that time, that just didn't feel right to me. I wanted to build a profitable business, and it became very clear that the aspects where we were, pioneering and innovating wasn't necessarily resulting in the financial results that we needed from a profitability standpoint that would allow us to grow organically without raising additional dilutive venture capital. And so I decided to kind of pivot in that direction, build a real business that was profitable. But in doing so, there was definitely aspects of it that kind of dimmed my creative passion and my purpose for launching the business in the first place.
I love that, Brandon. It's very powerful. And I think a lot of entrepreneurs go through that journey. Brandon, if you don't mind me asking, I'm curious to kind of understand when you sold that company, how much did you make in terms of like liquid, wealth?
I haven't actually kind of shared that publicly before, so
That's
I
fine.
prefer to keep that private if
That's
that's okay.
that's perfectly fine. The real question is that the most money you'd seen up until that point in time?
Yes, up until that point in time, for sure.
Did it feel like life-changing money?
Life changing was to round trip my first entrepreneurial venture and sell a business to arguably the most ruthless private equity firm in the country. They're known for just being absolute killers. And so that felt like a massive milestone for me from an identity and a mindset and just an overall professional kind of achievement standpoint. Of course, the financial piece is there. That becomes more of a byproduct. For me to go from never having a job before to launching a business, raising a bunch of capital, and then round tripping with a preeminent private equity firm, massive milestone for me that I think in of itself was the bigger transformation.
So let's pause there. Brandon, first of all, congratulations. I know we're talking about success you had very early in your career, but I think it's worthwhile. And what I want to try to do is I want to try to help the listener understand because not every listener runs their own company. Not every listener raises capital or interacts with VCs or sells their company. For you, looking at that experience, would you say that it's more rare or more noteworthy than winning your first title with USC?
Wow, that's a great question. There was an aspect of it that felt deeply personal. And I had two co founders, I had a team of people, both employees, advisors, investors, that felt very much a part of that process. But there was something about that milestone that felt more like, I did it. Like, fuck, like this is me. Whereas in a football, it felt more like we, like very much a team win. And again, I don't mean to discredit the team members that contributed to the business outcome, but there was something about that really felt pretty fundamental to me as a professional.
I hear you, Brandon. So let's pause and say congrats to the whole team because it is a team effort. But I think sometimes, when it's your company, it's like your child.
Right.
And like giving up, selling, exiting, your child is a hard emotional decision. But it's also like, hey, now my child is ready to kind of, sprout his wings and kind of tackle whatever he's going to tackle. And somebody else can take that on. For you, when you had that exit, which I'll call life-changing money, how did you think about managing your financial portfolio? Were you thinking diversification? Is that when you started to dabble in real estate? Help the listener understand what maybe they should do if they had a massive exit, whether that's a million, 2 million, 5 million, 50 million. What should they be thinking about from your perspective?
So it's interesting. Those are two separate questions. One, what did I do, or even what would I do versus what would I recommend? It's funny how that works.
And just a
Yeah.
casual
Do as I
conversation.
say, not as I do, right? I'll start with kind of the fun side. For me, I had confidence and I wanted to reinvest in myself. I wanted to invest in things that were creatively and intellectually challenging for me and not familiar with. I'm not an expert in bond trading, in stock trading, in crypto, and whatever else. And so, sure, I think it's appropriate and prudent to have diversification and allocation there. But for me, it's like, do I feel more confident with some person that I don't know at JP Morgan following whatever the bank tells them to do and trying to beat, or an index fund trying to beat a benchmark, or just reinvest in myself? And you can imagine kind of which direction that I went and just more my nature. It isn't that it's a zero sum issue that I took every single penny and reinvested back into myself. Of course, thinking about things from a diversification of asset class standpoint, a diversification of time, short, mid, and long-term standpoint, making sure that you have enough cash and liquidity for a rainy day, beginning to invest. I have 3 young daughters, invest in their futures, kind of setting up those funds and 4 saving strategies. So there's a variety of things that I did that way. Those felt more like administrative musts for me. I really wanted to do was like, how do we take this to the next level? How do we really level up and kind of expand the empire, so to speak?
I love it, Brandon. So talk to us about that second startup, right? You did everything that you should do that was responsible from your perspective. You took care of your 3 kids. How old are they, if you don't mind me asking?
I have 3 daughters that are 4, 6, and 9 years old, and they were
Nice.
not around when I sold that company.
Okay. Okay. So that meant the risk tolerance was much higher, I assume.
Yes. Oh yeah. No girlfriend, no wife, no kids, no dog, no mortgage. Just freaking grind.
Good for you. Different time. I feel like, if you were to have that much free time now, what would you do? Let's
Last few
uh,
nights, I've actually
uh,
had fun and also realized how unsustainable it is to work and grind at that level. I always took it as a major point of pride. It's a little bit of that kind of football player mindset where you just grit through everything, where I would always be the first one in the office, the last one to leave, and kind of pride myself on, I don't need sleep, sleep in your day, a lot of that type of stuff. And obviously, just brute force and outworking and outputting everybody gives you a real competitive advantage, full stop, period. I've also found that when I go past a certain threshold of what I call strain, I kind of grade myself on a strain score every night before I go to sleep. And I find that if I go 2 consecutive days above an 8.5, I know that I'm going to crash the next day. And so I still will show up, I'll still put in the same hours, but mental acuity drops, performance drops, irritability goes through the roof. And I start making decisions from a more of a fear-based and stress-based kind of center. And I found that it's actually worth sacrificing the output and the brute force, because over the long term, the productivity, not necessarily the output, but the productivity and the quality of that is so much higher when you think about it more strategically through the lens of sustained performance.
yeah, Brandon, I love that because I would second that and strongly agree. And I guess the deeper question from my perspective, Brandon, for you is, do you feel like that realization is a byproduct of like age, like we just got older and we're slower? Or is it a byproduct of experience where like we're very good at what we do and we know when we're not at the top of our game and we can zero in on what micro factors are affecting our output?
I think both. Obviously, over time, you learn a lot more, but also through that experience and perspective of other people and studying how world class performers operate and the intentionality they take to their practice, whether those are athletes or executives or fill in the blank with someone else, and really trying to understand, well, what does that look like? And how do I take that level of focus and intention and metrics to my personal life that I did as an athlete or that I did as an entrepreneur, and really begin to get curious and kind of bringing conscious awareness to all the subconscious behaviors that are running my life. And so that became like a real obsession of mine. I track all this kind of stuff to really try to perform at the highest level I possibly can. And in doing that, a lot of the cliche things that I scoffed at and viewed as woo woo or soft just kept hitting me upside the head like, oh, I
How
don't want
annoying
this.
is that realization?
It's like, I really don't want this to be right. I just want to be the tough guy that powers through and tells everybody, shut up, quit whining, and just go. And again, there's a time and a place for that. But I also realized through just objective tracking over a long period of time about where and how do I perform my best, and the obvious things of finding your center, being in alignment, making sure that you rest and recover, stepping into an observer to see yourself and watch yourself practice the way that you would in a football context. If you're a football player, every single practice you have is being filmed. You watch that film, probably 2-to-1 ratio to your physical practice versus your film practice. You're being watched by 100 other guys in the room, and they're breaking apart every single part of your decision-making process and your physical mechanics. And so that's normal. And to be able to step outside of yourself into an observer and figure out how do you improve. But the practice of doing that as an individual is one that is very foreign and very unfamiliar and uncomfortable for people to go through. But if they could be open to doing that and provided the tools to do that, the level of performance increase can be astounding for people. And so I've really tried to kind of build my own system for doing that on my own over the years. And through that, I've just learned so much about performance and also fulfillment, because you can end up with a tremendous amount of success, but feel hollow at the end. And I think that's probably a bigger failure than failing in the business in the first place. Like, what are we doing this for?
I love that, Brandon. And I think in my own life, that realization has been like diet and exercise and how important that is. For you, Brandon, what have been those things where you're listening and you're like, ah, this is too woo-woo, this is too soft, they're wrong. And then after one or two or a couple, realizations, books, you realize, hey, I do need to change this to improve, 1%, 10%, etc.
Yeah. Well, first off, just to respond to your comment on the physical side, no question, your physical life force is the foundation of everything else. So that has to be top of mind. And so I'm pretty intentional about how much water I consume, how much I sleep, how I exercise, how I track my macros. That's just foundational. Beyond that, I think it's really important to have clarity around your identity and all of the beliefs driving your behavior. We don't realize that like 95% of our life is driven by kind of a default operating system in our mind that we have no awareness of, gave no consent to. And it's just there, just running in the background. And so I've really tried to pay very nuanced attention to all of these little thoughts that are driving my life. And I realized, oh shit, is that true? Is that what I want? Is that in alignment with my goals? And so often is the case that it's not. And so, it's just kind of building more of a daily practice and almost a mindfulness and an awareness about what's running in default. And then I have a variety of techniques that I've used and saying, okay, great. I'm going to identify this new belief or this tweak to my identity and put that into a plan, no different than I would if I were saying, I want to get in great shape. Great. Go do 3 sets of 10 bench press, go run 2 miles, go eat this macros. Like there needs to be that degree of intentionality and rigor to improving ourselves.
No, I 100% agree. And so for you, Brandon, if you don't mind me asking, what were those blind spots that you identified as, hey, these are the ones, maybe the one, two, things that you realized that changed things for you?
Yeah, I'll give you one kind that's a fun one in business and how it ties into football, since we've talked about that so much today. Is in football, I mentioned I was kind of smaller as a quarterback. I was more of a playmaker and somebody that would run around and be agile. And so in that context, I felt like I thrived. It was my identity to be a playmaker. And so when the pocket collapse, the play breaks down, this is my moment to shine, right? And in a business context, I felt like, oh my God, the metaphorical pocket collapses. That's my fault. I did something wrong. I let somebody down, and it became very heavy for me. I also felt like I was doing it on my own. Whereas in a football context, I felt like I had my entire team that was supporting me. So I began to observe each time that something bad were to happen in business. I noticed that my initial pattern was to have shame and guilt show up and take the full load of responsibility myself, which puts you in a very non-resourceful state. And when I noticed that energy starting to come up, I immediately stepped into a Playmaker. This is where the magic happens, like as a little mini mantra. And it would completely reframe my relationship with whatever chaos was ensuing in my day. And it became like a fun, playful challenge to say, cool, how do I go make this shit happen? And so just that one kind of small, silly example is an example of a mindset shift that would be impossible if I didn't first understand kind of what was happening behind the scenes and then install it with something that was kind of anchored in previous success and evidence that would allow me to kind of break through and have a completely different frame for how I apply meaning and take action for things in my life.
I love that, Brandon. And I think it's very, very relevant to a lot of people to really slow down, reassess how you're analyzing a situation, and change the story. And that level of neuroplasticity doesn't come overnight. It's about kind of understanding, like you mentioned, that 95% of things that you're kind of doing subconsciously. So, Brandon, I want to pivot a little bit because it feels like, you're living this interesting life. You're killing it in football. You're killing it in the startup realm. And then for some reason, you went to real estate, which for some people can feel boring. It can feel like a very slow space where there's not that much innovation. Help us understand what led you to catch that real estate bug, and why is that where you decided to scale more long term?
Yeah, it's a fair question. So between company one and two, I began investing with a childhood friend of mine. Investing became advising, advising became part time, and then ultimately it became full time. I was incubating a handful of tech ideas. I mentioned earlier on the call that I was fascinated that there were $1 trillion in single family home values, and there wasn't one company that anybody could name that was in the business of redeveloping homes. And so I noticed that all home builders were really built on suburban expansion. And what I thought was a far more compelling trend line was urban contraction. The city of LA, over 70% of our housing stock was built before 1960. We have a very old housing stock, obviously a very congested city. People want to be back in the urban core, but the housing stock was built kind of in a post-World War II generation and is absolutely not conducive to modern day lifestyle. So just that fact pattern alone to me said, well, how do we build a vertically integrated urban developer? So we took a lot of pages from the playbook of traditional home builders in the sense that we had model homes. We built a tech platform to identify every parcel in the city of LA where our model homes could essentially be placed, and try to apply that exact same kind of manufacturing cookie cutter approach of a tract home builder, but done on a scatter lot basis. And so that creative challenge was very fascinating to me. And I got my broker's license and contractor's license, and we built a tech platform to integrate the entire life cycle from acquisition through disposition. And all of that just felt an incredibly fun entrepreneurial challenge. It just so happened to be in real estate, but it really felt like it was tech centric and had the potential to scale the way that any other early stage, venture funded startup would.
That's awesome. And how long have you been running this company, if you don't mind me asking, Brandon?
I believe that company, because again, Buddy had a company that I was investing with. We kind of spun out Avenue Homes. I believe it was in 2017. That went through about 5 years. We were on an absolute warpath ascend in a really, really positive way. We had basically 75 single family spec homes in our pipeline when the pandemic hit. And that would have made us the largest home builder in the city of Los Angeles within from startup to 3 years. So it was a really, really rampant scale up. When COVID hit, our investors, us, and everybody else in the world thought that high end home values were going to drop off a cliff. Our lines of credit were frozen. Investors wanted to fire sale assets. There was a period of about 6.5 months where you legally couldn't even show a property. No open houses, no tours. So if you wanted to sell a $5 million home, you had to do it through some type of video conference, basically walking someone through with a
A
cell
nice
phone.
Matterport scan.
Yeah, like a Matterport scam, exactly. Which some people did, but long story short, it really began to implode, and we had a pretty significant overhead. We were scaling up, and it was a volatile time. Our board of directors were very, very bearish on the outlook, wanted to scale down operations meaningfully, and we fire sold some assets. And by the time that we got through that, 18 to 24 month transition, we were really kind of a shell of where we were pre-pandemic. And some board members wanted to double down, some wanted to back out. It became kind of a political challenge. And so we found a way to kind of gracefully transition, sell out the portfolio, and we're still kind of in the process of doing that. We made that decision in 2023, and that's kind of been sunsetting out while Angelino, my new business, has been kind of transitioning in. And, thankfully, Avenue will end in a positive way. And Angelino is in a really, really great spot to, play a major role in solving LA's affordable housing crisis.
And when you look at the LA affordability housing crisis, is the goal to build, those luxury middle market type houses, or is the ideal product something different?
We are building affordable housing for income qualified tenants. So these are multifamily apartment buildings that are deed restricted assets, and in some instances subsidized by the federal government, either the rental side or even in some instances on the financing side. So this is a pretty meaningful departure from the spec homes or, kind of a more attainable missing middle housing stock that we've built through Avenue Homes, and a much more traditional multifamily affordable housing product type.
Awesome. Awesome. Is that primarily in LA or somewhere else?
Only in LA.
Only in LA. Any product that's built and already rented out or not yet?
Nothing rented yet. We have quite a few that are in construction and in the pipeline to get started. And the first deliveries will be about the end of this year or early next year.
Okay, awesome. And how is the quote unquote high interest rate and falling interest rate affected, Angelino's ability to scale?
Well, I think the macro environment is very challenging for traditional multifamily. I think LA has a particularly unique set of factors in the sense that ED1, which is a city ordinance, as well as a variety of state bill and assembly bills, have allowed for very, very compelling incentives for developers to build affordable housing. And so density can literally increase tenfold. Parking is removed. A huge part of the planning and permitting costs are removed. The utility costs are removed, not only in the ongoing operating expense, the upfront utility to bring in line extensions and transformers for a big building. In LA, that is notoriously challenging and oftentimes can result in a year-long delays, and they're multi-million-dollar cost centers. So those are removed, and so on and so forth. There's a variety of benefits that these incentives make the return profiles very, very, very compelling relative to a traditional multifamily or market rate project, which I've not seen one that's penciled in the last 3 years.
Yeah, Brandon, I think I want you to kind of elaborate on this for the audience because sometimes California gets the reputation of being very like anti-development, very expensive, maybe not a good market for real estate, let's put it. So help us understand these laws that you're referencing. Have they been in California for the last decade or so, or are these recent changes?
These are recent changes. So our mayor, Karen Bass, and her opponent, Rick Caruso, both ran on the campaign promise of making affordable housing the number one priority of the administration. And so literally day one, when she was inaugurated, she enacted an emergency directive called ED1, Executive Directive Number One. And that is essentially the bundle of incentives, and I can expand upon that if you think it would be useful, that essentially brought market rate developers into the affordable housing sector. And the way that she did that, to oversimplify, was go speak to a few dozen of us and say, what would I possibly need to do to bring you over here to help solve this problem? And the list was long and some would argue egregious. And for the most part, she came back, got that done, and said, hey guys, you said if I've got all this done, you would come build. I got it done. It's go time. And that emergency directive was literally on a 90-day basis. So then it was renewed for 90 days, renewed for another 90, renewed for that final 90, which was a full year, and then ultimately enacted into permanent code. So now it's under the auspices of AHIP, and it is very unique, very compelling, and I think doing a really good thing for our city and our citizens.
I love it, Brandon. And I guess to make it more relatable for people, how important is it from your perspective to be able to notice these changes in the market and strategically pivot? We talked about your background as an athlete. We talked about the pocket collapsing. We talked about business challenges and your ability to adapt to different challenges. For you, when something like zoning ordinance changes, you're not talking about that mom and pop investor that's buying a single family house, that's painting the outside, redoing the bathrooms, and flipping the house. You're talking about ground up construction with rezoning. This is complex stuff that most people in the nation don't do. And again, we're talking about like 1% of 1% type situation. How important is it from your perspective to be able to notice micro trends happening in LA and position yourself as the foremost or one of the foremost people really leveraging this legal changes and the zoning changes to create value for the entire city, whether that's people living in the properties or your investors?
It's an absolute strategic imperative. The city is the least affordable city in the United States, and we are chronically, arguably, the most undersupplied market in the United States. The combination of those two is just untenable for the long term. We have the Olympics coming to our city in just a few years, and really no viable pathway to solve this problem. And the status quo clearly was not working. So we needed to think outside of the box and do whatever was necessary to innovate.
Brandon, one question that I would ask for you is you've obviously had a very successful career from a sports perspective and professionally as a tech startup founder and now even the real estate has a strong tech component. For you, I'm sure you've had the opportunity and the privilege of mentoring many people. I know you mentioned that, you're raising three daughters. Help us understand if you were advising somebody who is maybe 15, what are the three things that you would say or you would tell them to enable them to really aggressively scale and give them the foundation to grow?
First of all, I'd say think big. especially if you're 15 years old, think without constraints because you probably don't have them, right? You don't have the wife, the kid, the mortgage. You have your entire life in front of you. Doing a small house or a big house or a big house in a small apartment building or a big apartment building is the exact same amount of work. I'd say number two is to stay focused. We're living in an age of side hustles and lean startups and testing landing pages. Just focus on one thing for a long period of time. And if you show up every day and you work hard, good things are going to happen. And then the third part of that is, I think, a matter of really enjoying the process, like finding the joy in the journey, being obsessed with the inputs, not the outputs. I feel like the younger you are, probably the more insecure or vulnerable you are. You don't have the frames yet. You're focused on outcomes. You're focused on what other people think. You're focused on your fear and the woulda, coulda, shouldas. Just stay focused. Invest in a process, understand what the things that you are in control of, track those like crazy, and try to get better every day.
I love it, Brandon. What if that person was 25? What would you tell them?
I think those same rules are fundamental and would apply if you're 15, 25, or 75. I don't think you should ever stop. I think once you get to that point, it starts to be a new set of fears that come in. And at that point, well, I've already started. I studied this in college. This is my first job. It's too late. You start getting into this too late game. I don't think it's ever too late to do anything. We're living in an extraordinary time where you can learn anything you want to learn. You can meet anyone you want to meet in a really compressed period of time. Go for it. Don't waste a day. Every single day is vitally important. In your 20s in particular is an opportunity to experiment and fail hard and fail fast. And that's totally fine. And you should embrace that.
I love it, Brandon. Now, if somebody's listening to this episode and they're like, hey, I really need to meet Brandon, I really need to learn more, what is the best way for them to contact you?
LinkedIn. I just started. I haven't, before a few months ago, I hadn't done a single social media post of any type in my entire life. So I am definitely not the thought leader in that regard, or the content creator, I should say. But I have begun posting and begun to be more active on LinkedIn. So I believe it's just linkedin.com/Brandon Hance. That's about it.
Awesome. So what we'll do is we'll drop that link in the show notes so that it's easy and efficient for people. Brandon, if you don't mind me asking, I assume you're very busy and have next to no time and have constant different fires, constant different, pockets collapsing, etc. Why invest time in LinkedIn, especially if you've never done the social media game?
Yeah. It's a great question. I was told by somebody that I respect that doing so will help you clarify your thinking, help you increase your accountability, and will help you engage with a like-minded network of people, some of which you already know, but they didn't know that you valued the things you do or vice versa. Some of which will be new and brought to you through the things that you're speaking of. And so when I began to look at, wow, if I could, in fact, increase the quality of my thinking, increase the quality of my network, and increase the meaningful engagement and meaningful relationships of said network, that absolutely overwhelms the list of why nots. The imposter syndrome, the waste of time, the feeling like a douche, whatever it may be. And so I figured, you know what, it's worth a experiment. And I'm early in that process, but I have to say, with a handful of some douchey posts that were a little bit cringy, it's been overwhelmingly positive, and I've really enjoyed the process and will continue to invest in it.
I love it, Brandon. I think I'm in that boat as you, maybe a couple of years earlier where it felt very uncomfortable, etc. But there's a huge amount of growth. And I think the reality is that you want to grow efficiently. I think LinkedIn is one of those places where people can grow efficiently and connect with people that have similar values to help them scale exponentially. So, Brandon, once again, I want to thank you so much for taking the time to join us on the podcast, for sharing the insights and the honesty. Conversations like this matter because they move past theory into what actually works. Here's the truth. Progress doesn't come from consuming more information. It comes from making clear decisions consistently over time. You've heard Brandon talk about that. You've heard him talk about slowing down to really be intentional, to really understand what drivers are impacting your performance and your ability to execute. And that's the intention with MyFinJourney, to bring you conversations that sharpen how you think about money, risk, leadership, and execution without the noise, hype, or like Brandon said, cringiness. If this episode did that for you, hit the like button, hit the subscribe button, and share it with a friend so that they can also grow and scale with you. Thanks for joining us on MyFinJourney. We'll see you in the next episode. Bye, guys.